I'm going to start with Hero because let's start with some good news. And Hero did well in Thursday's trade itself. It was expected to do well, and the numbers have delivered on expectations. So top takeaway is definitely a thumbs up. It's a beat on all fronts. Sales grew 13% in festive season, so that's great. They've maintained their margin guidance to 14 to 16%. They have more EV launches clocked in the next 6 months, and overall beat in results led by a sales growth of 7%. So look at it on all parameters. Revenues grew about 11%, more than estimates. Their operating income grew about 14%. Their margins were at 14.5%, so that is on estimate itself, and profits were at 14.2%. A lot of takes on Hero, but I'll tell you what Citi is saying. They've retained a buy with a target price of 6,300 on Hero. This is, of course, a huge upside, but they have reduced their target price. It was 6,600 earlier. They still see a 36% upside on the stock because the management's outlook on demand is positive, and they expect momentum to sustain during the upcoming festive season. Festive season was slightly better in rural areas for Hero, and continued high expenditure on electric vehicles could impact margins. They have slightly trimmed their earnings estimate over FY25 to 27, resulting in the target being tweaked down. That is why from 66 to 6,300 for Hero, but no doubt, definitely positive. Honasa, not so much, and we'll get you a deep dive on it as well. A pretty bad set from Honasa, makers of Mama Earth, so a thumbs down. It's a miss on all fronts. In fact, they've turned loss making from a profitable company because of a one-time inventory correction of 63 crores. They also have a weak business commentary in the second quarter. The quarter has been hit by slower growth in their core brand and competition, their core brand being Mama Earth. So revenues are down 7% year on year. You've seen losses of 30.8 crores, that's in operating income, versus a profitability of 40 crores. Net loss of 18.5 crores versus a profit of 29.4 crores. So a few things seem to have not worked for Honasa. One of them may be their attempts to not just sell online but go offline as well. And that metric has somewhere not really worked out this quarter. The stock has been downgraded to a sell from a buy by MK. Target price has been cut to 300 rupees from 600 rupees. And that's really where I think the gash might come in on Honasa. The weak commentary coming in from the management is denting the growth outlook. Slower top line growth has impacted margin estimates as well. And MK, in fact, has reduced their forecast for earnings per share by 35%. So rough day for Honasa. But don't worry, it's not the worst in our list today, unfortunately. Gas stocks will be under pressure today. And this is because of policy moves, higher margin risk now for IGL and MGL after the latest announcement. That's Indraprastha Gas, Mahanagar Gas, even actually Adani Total Gas, because gas companies will be seeing a further reduction in the allocation of domestic gas they get from GAIL. Now in October, ONGC had done the same thing. Now GAIL has come in and done the same thing. Of course, this is a petroleum ministry decision, so nothing that gas companies can do. But because they have seen a lower allocation by these gas companies, the government-run gas companies, they will have to go out and buy from outside at a higher price. So what has been the cut? Gas companies have seen a 35% cut in domestic gas allocation in 2 months between ONGC and GAIL. And the allocation to city gas distributors have reduced further. So first cut from ONGC, second cut from GAIL, all of that on your screen. IGL, the worst hit because a total of 41% cut in 2 months. Adani total 29% and MGL 38% in all. So what happens because of this lower allocation? It puts margins of the company under pressure. It leads to companies sourcing more expensive gas from spot LNG market, and it will hit their earnings also quite heavily. For Indraprastha Gas, it could hit earnings by 46%, for MGL by 25%. So a whole bunch of brokerage notes there have also echoed this, and we'll run those on the screen for you. But essentially, this is going to be a tough one for for gas companies.
Yeah, and so many notes and so many people talking about how, I mean, people citing this back to 2023 when on the back of this Kirit Parekh committee recommendations, the valuations of the sector came down. So for, I think IGL was maybe 13 times, MGL was 9 times, currently about maybe 20% more expensive. So could valuations and sentiment, of course, sentiment-led valuations come off to those, and therefore will today's cut only be today's cut will not necessarily be the end of it, because if the valuation multiples have to come off, so remains to be seen. But yeah, clearly a lot of bad news out there.
Yeah.
Can I start with good news though?
Okay, must.
Okay, let me start with good news and then I'll come to some bad news, because some microfinance names are really taking it on the chin. But the good news is for metals. So let's maybe start with metals. There is some bit of positives out there for the metal names. Now, what's happened is that aluminum prices jumped by about 8% on Friday. And therefore, that brings Hindalco, Nalco, Vedanta. It's a thumbs up, by the way. So keep this in mind. So Hindalco, Nalco, Vedanta will all be in focus today. China scrapped export tax rebate on aluminum and copper products. The move, of course, is going to reduce Chinese aluminum exports and will potentially tighten global supply. Remember, export tax rebates are government subsidies that reduce tax burden on Chinese exporters. Now, because these have been taken off, Chinese exports will be lower in the market. Therefore, the aluminum market ex-China will become tighter, as a result of which prices ex-China are expected to move higher, as a result of which aluminum prices moved higher on Friday. Now, copper prices too inched up higher. There is a city note today which says this is more impactful for aluminum than copper. And therefore, the impacts could be transitionary as well for copper prices. But be that as it may, in today's session, you will probably see Hindalco, Nalco, Vedanta, all of them do very well in trade. So keep an eye out for the metal names. Conversely, some of the end user industries, autos, packaging, etc., might not necessarily have a very good outing. So keep an eye out for those. That's the first one. Then, well, some bad news. The bad news is on Fusion Micro. The notes to, so results were bad, okay, but I'm marking the notes to accounts. It's a clear thumbs down for Fusion Micro. Why so? The notes to accounts say this, that the company was negotiating with its lenders to obtain waiver from the right of immediate repayment for a period of 12 months from the balance sheet date. The lenders have not waived the right to demand immediate repayment. What does this mean? This means that they say, and they themselves say, and the auditors say, Deloitte is the auditor, they say that this condition results in material uncertainty, which may cast significant doubt on the company's ability to continue as a going concern. And therefore, the company may not be able to realize its assets and discharge its liabilities in the normal course of business. This is staggering. Their gross NPAs had hit 9.4% as of September 2024. This is probably resulted, what triggered this whole auditor comments on material uncertainty. But this is serious. The stock was down 5% on Friday, or Thursday, excuse me. There is no reason why the stock will not be down 5% today, and probably for the foreseeable future. I mean, we need to call the company and talk about this, but this is...
the question that's coming to my mind, Neeraj, is definitely very, very bad for microfusion, but is this just a microfusion problem?
No, it really isn't.
That I think will have to be seen. Will you see others in this space, smaller lenders, perhaps feeling a bit of heat and pressure? So
yeah,
I think those are going to be some of the big questions this morning, definitely.
But there's a third one, Tamanna, which is also bad news for my part, and that's also a thumbs down, and that's Reliance Power. Now, this is, I mean, this is amazing, really, what's happened. So, picture this, viewers. Reliance Power has received a show cause notice from SECI for allegedly submitting a fake bank guarantee, a subsidiary. What happened? Like, think of this. A subsidiary of Reliance Power provided a bank guarantee purportedly issued by the Manila branch of First Rand Bank, and SECI's conversation with First Rand Bank confirms that there is no such branch. So they issued a bank guarantee, as a subsidiary issued a bank guarantee of a branch of First Rand Bank that doesn't exist. Now, SECI's of course stated that this conduct suggests malified intent to manipulate the tender's outcome. I mean, this is this is serious stuff. I'm smiling about this, but it's this serious stuff.
So this is what we reported on NDTV Profit last week as well with State Bank of India. So this seems to be a pattern, making up bank guarantees, making up names of lenders, in that case a fake email ID of State Bank of India, and this continues.
Yeah, this is bad news, and no wonder the stock has come off from the levels that it used to trade at, and it's at 35. It's a very active stock. A lot of traders were very active in it, but the stock has come off in the last 1 month, and no reason why it shouldn't continue doing that. So keep an eye out for these. So these are the top 3. More bad news, as Tamanna said, than good news. But yeah, there's certainly some news out there to discuss.
Okay, one good news. Should we do one good news? All right. In terms of good news for a stock, which is Morgan Stanley is quite excited about Zomato. I mean, I thought we had seen a lull in those very, very positive brokerage notes, but here comes one more. Mahima, Morgan Stanley is excited about Zomato at a time when Swiggy has also listed, and I think there is some commentary from Equaris. But what is Morgan Stanley saying on Zomato?
Right, Tana. So they've retained overweight and they've increased the target price to 355 for Zomato now, and this poses a 36% upside from its closing on Thursday. Now, what they're saying is that Zomato is a potential doubler in the next 3 to 4 years. Quick commerce share in India's retail market is on the rise, and this should benefit Zomato overall. And the company has strong execution in food delivery and quick commerce as well. What they're also saying is that the company to see deep balance sheet and large profit pool by 2030. So the targets that they've given is from a longer term perspective. And what they're saying is that quick commerce should surprise on the upside category expansion and wallet share gains to drive quick commerce. Despite the competition, they expect Zomato to retain market share is what the brokerage is pointing towards. And the stock pricing in quick commerce is valued at 120 per share, which is kind of conservative. Now, if we just compare this with Swiggy, overall, Zomato has an overall valuation of 260, out of which they're saying 120 is attributed to quick commerce. So 40 to 50% of that is quick commerce now. So this could potentially mean, or this could potentially, direct that Swiggy could also use, use this as a benchmark, considering, 40 to 50% of their total valuation coming from quick commerce. So this is the overall view of what the brokerage is saying and why it's constructive on Zomato.